Hello, Assalamualaikum and a very good morning to everyone. I hope you guys are doing well, and this video I will explain the chapter 4. Okay, we will continue with chapter 4, still in the foreign exchange market. But for this chapter, I will focus on bid rate and ask rate. Also, we will calculate the bid-ask spread, and we will calculate the cross rate. Okay, there are three ways to calculate the cross rate. So I will. This video is until calculation of the cross rate. Let's proceed to the bid rate and ask rate. Okay, usually banks or dealers normally give currency quotation in pairs because a dealer usually doesn't know whether a prospective customer is in the market to buy or to sell a foreign currency. For example, Malaysia Ringgit 4.0025 80 per US dollar. So if we look at here, there are two rates here. There are two rates given by the bank. The first rate is the bid rate. The bid price or the bid rate is what the dealer is willing to pay or bid for a currency, which is Malaysia Ringgit 4.0025 per US dollar. The second rate is ask rate, which is Malaysia Ringgit 4.0080. Okay, we just take 80 per US dollar. The ask price is how much the dealer wants for a currency, or in other words, the price that the dealer wants to sell this currency. Okay, with the previous example, still 4.0025 and 80 per US dollar, the common practice done is dealers do not quote the full rate to each other. Instead, they quote only the last two digits of the decimal, which is known as the small figure. In the above quotation, the small figure are 25 and also 80. The 4.00 is known as big figure, and it is assumed to be known by all traders. And since forex market is an interbank market, banks will always buy at low price and sell at high price. Therefore, bid rate is always then lower, will always lower than ask rate. And exchange rates also always quoted in 4 decimal places. Okay, if you still remember, we learned the reciprocal from the previous video. So the reciprocal of each other. Note that when one quotation is converted into another currency quotation, the bid and ask quotes are reversed. Okay, the bid rate for Malaysia Ringgit per US dollar, the bid rate is 4.0025 and the ask rate 4.0080. If you want to convert from Malaysia Ringgit per US dollar to US dollar per Malaysia Ringgit, you have to make the reciprocal. So to get the bid rate for US dollar Malaysia Ringgit, you have to calculate 1 over ask rate for the previous one, this one. So 1 divided by 4.0080, you will get US dollar 0.2495 per Malaysia Ringgit. And to get the ask rate for US dollar per Malaysia Ringgit, you have to find 1 divided by 4.0025. You will get US dollar 0.2498. So how to calculate to get the ask rate? You have to reciprocal 1 over bid rate. Okay, as I told you before, the bid rate is always lower than ask rate. The bid rate is 2495 and the ask rate 2498, which is the bid rate is lower than ask rate. Okay, I hope you guys understand the concept and how to calculate the bid and ask rate. And then we will proceed to bid ask spread. Still within the similar example, the bid ask spread is simply the difference between the price at which a dealer will buy and sell a currency. So banks normally do not charge a commission on their currency transaction. They make profit from this spread. This spread is usually stated as a percentage cost of transacting in forex market and is computed as follows. So we look at here percentage of spread Malaysia ringgit per US dollar. How to get the spread ask price minus the bid price divided by ask price times 100% because the value is in percentage. So by using this formula, we will calculate the percentage of spread. Okay, 4.0080, this one is us, minus 4.0025, this one is bid price, and divided by ask price, 4.0080 times 100%, and the answer would be 0.14%. So this is the percentage cost of transacting in forex market. And they will get the profit based on this value. Let's look at the next one is cross rates. How is the cross rate happen? Okay, say we are given Malaysia ringgit 4.0125 per US dollar and Malaysia ringgit 4.8990 per Great Britain pound. So will we be able to know the quote for US dollar per GBP? From here, we get the Malaysia ringgit per US dollar and Malaysia ringgit per GBP. So should be able to know the quote for US dollar per GBP? The answer must be yes. And this is known the cross rate. How is the cross rate happen? The cross rate is the currency exchange rate between currency A and currency C derived from exchange rate between currency A and currency B and between currency B and C. Okay, currency A and C derived from relationship from exchange rate between A and B and also B and C. So from this value, we will get A and C. Okay, A and C. This is how cross rate happen. Dealers or banks normally provide quotes for only the most liquid or stronger currencies such as the US dollar, euro, pound sterling, and Swiss franc, and many more. Okay. Exchange rate between other currencies is normally calculated as the cross rates using the quotes for major currencies. The common practice among currency traders is to calculate the cross rate in the manner of weaker value against the stronger value currency. It means that the stronger value currency will be made as the foreign currency or on the one side unit in the cross rate quotation. Before we proceed to calculate cross rate, you have to know the one side unit and many side units. What is difference between these two units? Let's say the current rate of ringgit against dollar is 4.0125 per US dollar. By looking at the decode, there are two units expressed. 4.0125, this is the many side units, and $1 is one side unit. Okay, so this one many side units and this one is one side units. And from this, we will calculate the cross rate. There are three ways to calculate the cross rate depending on position, the common currency in the codes given. Okay, we will use this example to calculate the cross rate by using three ways to get the new currency. The first way is cross rate common currency at one side units. For example, we need to calculate the cross rate for Malaysia Ringgit and Thai Baht. Okay, so Malaysia Ringgit and Thai Baht, if we look at from the example, we have Malaysia Ringgit per US dollar and Malaysia Thai Baht per US dollar. So here, the common currency is one side unit. Okay, in this case, the US dollar as the common currency is on one side units of the quotation. Therefore, to calculate the bid and ask rate for Malaysia Ringgit and Thai Baht is as follows. For bid rate, bid home currency over ask foreign currency. Okay, home currency here is Malaysia Ringgit and foreign currency here is, home currency is Malaysia Ringgit, foreign currency is Thai Baht. So here, bid home currency 4.10, this one, bid home currency over ask foreign currency. That is how to get the bid rate. So 4.1300 you will get divided by 32.4075, you will get Malaysia Ringgit 0.1274 Thai Baht. This is for bid rate. To get ask rate, ask home currency divided by bid foreign currency. Here, ask home currency, which is 4.1385, and bid foreign currency 32.4010. So you will get Malaysia Ringgit 0.1277 Thai Baht. This is for the ask rate. So if you want to quote as the bid ask rate, Malaysia Ringgit 0.1274/77/ Thai Baht. So this is how we quote the quotation. The first one is bid rate and then ask rate per Thai Baht, foreign currency. Okay, do you understand how to get the cross rate by using common currency at one side unit, one unit side? Next, we move to the second ways is common currency at many side units. Okay, common currency at many side units. For this example, we need to calculate the cross rate for AUD per US dollar. Okay, so here, common currency at many side units. So here, this one is the common currency, many side units. US dollar, AU dollar, Australian dollar. Okay, In this case, the Malaysian ringgit as the common currency is on many unit side of the quotation. Therefore, to calculate the bid and ask rate for Australian dollar per US dollar, for the bid rate, bid foreign currency over ask home currency. So here, AUD, USD, this one is home currency, this one is foreign currency. So, bid foreign currency, this one, 4.1300. And ask foreign currency, this one, 3.1090. So you will get AUD 1.3284 per US dollar. And for the ask rate, ask foreign currency over bid home currency. So for us foreign currency, this one 4.1385 divided by 3.1015. So you will get AUD 1.3344 per USD. Alright, so let's look at the last way. Cross rate common currency at both unit sides. For this example, to calculate the Malaysia ringgit per Canadian dollar. So here you have to find Malaysia ringgit and Canadian dollar. Also this one, but this one per US dollar, so we cannot use this rate. We have to use the common rate adalah AUD. Okay, so AUD is located at the both unit side. The first one is as the foreign currency, and this one as a home currency. So to get the Malaysia ringgit per Canadian dollar, so this one is home currency, this one is foreign currency. We always use direct quotation. Okay, so in this case, the AUD as the common currency is both sides of the quotation. Therefore, to calculate the bid and ask rate for home currency per foreign currency, okay, Malaysia ringgit per Canadian dollar, the calculation is a little bit different with the other two ways. This one, bid home currency times bid foreign currency. So here, we use this rate. Bid home currency, this one, times bid foreign currency. Bid foreign currency, this one. So 3.1015 times 1.0718. So you will get Malaysia ringgit per Canadian dollar is 3.3242. For the ask rate, ask home currency times ask foreign currency. So ask here 3.1090 times 1.0798. So you will get 3.3571 Malaysia ringgit per Canadian dollar. Okay, so that's all for this video. As I promised to you, in this video we will cover only the bid-ask rate, the spread, bid-ask spread, and how to calculate the cross rate by using three ways: common currency at one unit side, or common currency at many unit side, or common currency at both unit sides. So that's all for this video. We will continue in the next video. Bye bye everyone.